Hi, I'm Ant Joblin and welcome to Money Trees, the show where we break down financial top fives for you. Now, we all know that the rich and famous like to, on occasion, tuck away their money in places where the taxman can't find it. Those are tax havens, offshore locations where money is kept for tax avoidance and other purposes. Their official names are Offshore Financial Centres, OFCs, and are often small, low-tax jurisdictions in remote locations such as Caribbean islands. In these places, wealthy individuals hold money within shell companies and anonymous entities. These OFCs are ranked by their SINC number, which indicates roughly how much more money comes into the country than should come in based on the size of its economy. At number 5, we have the Cayman Islands with a SINC rating of 331. The Cayman Islands are considered one of the world's most notorious tax shelters. They have no corporate tax, making it an ideal place for multinational corporations to base subsidiary entities to shelter their incomes from taxation. With no personal income tax and no capital gains tax either, it is particularly attractive to high net worth individuals. In 2015, it was one of 30 countries blacklisted as a tax haven by the EU, and in late 2019, the Cayman Islands promised to reveal the identities of every person who owns a company there by 2023. Whether or not it does remains to be seen. Bermuda comes in at number 4 with a SINC rank of 374. The British Overseas Territory only has a population of 71,000 and the economy is reliant on insurance and financial services. Bermuda was also blacklisted by the EU in 2015, and a year later, in 2016, it was named by the charity Oxfam as the world's worst corporate tax haven. Jersey is number 3 with a SINC ratio of 397. Jersey is one of the Channel Islands between England and France and has had a reputation as a tax haven since wealthy Brits started moving themselves and their money there in the 1920s to take advantage of its lack of tax on wealth and inheritance. Even though Jersey implements notional tax rates, the Tax Justice Network ranked Jersey as one of the most aggressive tax havens in the world. Taiwan comes in at number 2 with a huge jump in SINC ratio to 2,278. In 2017, the EU Economic and Financial Affairs Council named Taiwan a potential tax haven. The disputed nation is not often associated with being a tax haven, but the country came under fire for not signing on to implement the Common Reporting Standard, as well as its low number of bilateral tax treaties. The EU removed Taiwan from its blacklist in 2019 after it made commitments to reform its tax system. At number 1, we have British Virgin Islands with an almighty SINC ratio of 5,235. The BVI is the world's top tax haven and holds more than 5,000 times the value of what its economy should. The self-governing overseas territory of the United Kingdom is home to only 35,000 people and was one of the 30 countries blacklisted as a tax haven by the EU in 2015. The country does not impose any taxes on offshore accounts, and it has no tax treaties with other nations, protecting the financial privacy of its bank account holders. There are no taxes on offshore companies, and BVI offshore companies pay no taxes on profits or capital gains generated from overseas. The only associated cost is an annual business license fee, and with no exchange controls, it is extremely easy to transfer funds around. That's all we have time for today. See you next week.